What's up, Trader's Edge? It's Mark Sebastian, your only option. Today, we're going to talk about what happened with the S&P, bonds, VIX, and the Russell. We're also going to preview PPI. So, with that, let's dig in. All right, before I start, I just want to remind you, if you missed Hannah and Andrew's presentation yesterday, you got to check it out. It was spectacular. Click the link in this email. If you're watching me on YouTube, like and subscribe, and ask yourself why you're not on my email list to get all this awesome stuff that we send. So, now, with the market being super inside on Wednesday, something we kind of told you, right? I was expecting things to be a little inside. Now, the one thing that I was wrong on was I thought it might be a breather day for the NASDAQ and maybe a stronger day for the Russell and the Dow. Here's why that didn't happen. Chip stocks absolutely blew up. So take a look at the SOX index, is the Philadelphia Semiconductor Index. Had a pretty nice day. Here, let me get this to 3 months. Was up nicely, led by, strength in NVIDIA, in Google, AMD. So across the board, Mag 7 was strong, Meta, Microsoft, NVIDIA. The only ones that were kind of weak, Apple and Amazon, and Broadcom. They didn't like the A stocks today. Everything else they liked. So Apple being down a touch, Amazon and Broadcom being down a touch, with the other ones more up. That led to the NASDAQ up 0.6%, industrials down. So let's take a look at IWM. This is the Russell 2000 ETF. After a really strong day on the 12th, it's been kind of floundering. Why has the Russell 2000 been floundering? Why? It's the most interest rate sensitive of any of these ETFs. And take a look at TLT. This is, of course, the ETF that tracks 20-plus year treasuries. I mean, it looks terrible. It's down to 85.32. Our low from the 11th was 85 on the nose. And if I go back further, the low is, again, right here at 85. So we closed 85.28. We're right there. And these yields are getting really high. The 10-year yield over 4.5, the 30-year approaching 5. My question is, how long can the equity markets ignore bonds? Here's the level. If you just want to look at TLT, watch this break below 85. If we break below 85, I think you're going to get some serious downside selling, and you could see us get, into the low 80s, which would mean 30-year bond is way over 5%. That will hurt markets. I want to remind you, the last time, I'm going to go back to a 5-year chart, and I want to show you this. The last time bonds had a really, really bad year was 2022. TLT opened at about 150, and bottomed at 90. Down $60, 40%. Well, how was that year for SPX? Take a look. That was the worst year we've had since COVID by far. It was the only year where it was essentially a bear market. We closed down on the year. And we bottomed in October. And if you look at TLT, when did we bottom? October. We hit that double bottom right around October 20th, we hit that bottom, just like the S&P. So the bond market, you need to be paying attention to. If you want to go long equities, that's fine. I'm hedging with TLT and a little bit of VIX, because while the equity markets kind of ignored things, VIX did not. Right? On a day where we were super inside and green, VIX was up. Why? PPI, Powell, bonds. We have PPI on Thursday. We have Powell speaking on Thursday. And, of course, this bond market, and I think it was the bonds that were really giving it that little lift. Because, frankly, they're not really looking for that much out of PPI. If we look at option markets, S&P closing 58.92. Today's at the money straddle at 58.90s is $40. They're looking for a less than 1% move out of PPI. So I don't think it was PPI. I don't think it was Powell. I think it was bond market. VIX is starting to notice. So take that as a warning. There is some real risk there. So another way to kind of hedge that is Apple, which, out of these major names, the Mag 7, the Grade 8, I think Apple looks the weakest and is the most vulnerable to a sell-off. That one's scared. Apple, I'd be hedging with like TLT, Apple, some VIX, and then I'd be going long the overall market. Now, tomorrow, circling back to IWM, PPI in line or low. Powell, little dovish. IWM could take off. If we're going to rip higher to 6,000, about 100 points away, we're going to need IWM over 216, 217. We're going to need the small caps to start participating. So I like owning small caps, owning S&Ps and Qs, and then hedging it with like Apple, with bonds, and some VIX. That is the way I would structure my trades right now and the way I am structured. All right, folks. Once again, if you're saying VIX, I don't fully get VIX, then you need to check out Hannah and Andrew's presentation from last night. It will change your understanding of VIX and make you a better trader. Click the link in this email. And again, if you're watching me on YouTube, like, subscribe, leave a question or comment. I will answer it. And ask yourself, why aren't I on the Option Pit email? I could be getting this direct to my email box and all this other great information. Join me. All right, everybody. I am Mark Sebastian. I am your only option. Have a good one.